Are you looking to invest in an ETF but not exactly sure what to look out for to avoid wasting money? I have narrowed down 6 important checklists that will be helpful to you. But please, this is not a financial advice. Always make your own research. But these are some of the things I check out in an ETF before going ahead to purchase one. The first one on the list is total expense ratio. This is the amount that the fund charges you annually, whether the stock market goes up or goes down. So always make sure to go for total expense ratio that is below 0.5%. Some even go as low as 0.07%. This is important so that all your gains will not go to the fund as fees. The second on the list is fund issuer. Always go for issuers that are very reputable, like Xtrackers, iShares, Vanguard, because they have the likelihood of managing your fund well without shutting it down. The third on the list is fund holdings. Because an ETF is popular doesn't mean that it is good for you. Always check out what is in that particular fund before purchasing it. Let's say, for example, S&P 500 holds the top 500 companies in the US, but you might not want to invest in the US companies, so you have no business purchasing S&P 500. So always check out what is in this fund that I want to purchase in to be sure it matches your values and your goals. Distribution versus accumulating, which is a dividend strategy. So if you're looking to get your dividend paid out to you without it being reinvested, then always go for distribution. But if you want your dividend to be reinvested, then go for accumulating. This is for long-term investors because you won't get this dividend. It's going to be re-added into the fund, which compound interest makes your ETF grow faster. The fifth on the list is fund size and liquidity. Guys, please, before purchasing any ETF, always make sure that the assets under management is more than 100 million. I always go for 500 million because the higher the investors, the less riskier it is and the more likelihood that that fund will not be closed or merged. But if the assets under management is below 100 million, it means that it might not be attracting enough investors, which can lead to closing of that particular fund. Currency confusion. Always make sure to know if this particular ETF is trading or exposed to the US dollar. So because it's trading in the US dollar doesn't mean that it's exposed to the US dollar. Always check out for the trading base of that particular fund to know if maybe whenever you're selling, you might have to do another currency conversion. I hope this helps you. If you want more videos on investment, make sure to hit the follow button and I'll see you in my next video. Bye.